Hey everyone, it's James at Yoreevo with our March 2021 Manhattan Market Update. And we really could have just republished February's and said everything got stronger because that's basically what happened in March. Probably not to the degree that we expected, but across the board, we saw strength. It's actually getting to the point where we're starting to see some parts of the city tip into a seller's market. We're not willing to go quite that far yet, but things are certainly improving and doesn't really seem like it's going to let up anytime soon. So getting to the numbers, we saw very, very strong contract activity in March. Almost 1,500 listings went into contract, which no matter what you compare it to, was very strong. We're comping COVID numbers now, so for the rest of the year, the numbers don't really make much sense on a year-over-year basis. So what I did is I looked at the average March in 2017, 18, and 19, and we're up 46% from those levels. We're also up 37% from February, which if you remember was a very strong month. So again, very strong across the board, no matter what you compare it to. You can see here, we're starting to dip off in the comps. So these year-over-year numbers don't make any sense, but very, very strong compared to prior years. Doesn't matter what price point you're looking at. We're up 40 to 55% across the board. And then we showed this chart last month because this February was record levels. And now here's March. So this chart only goes back to 2012 because our data only goes back to 2012. But I actually saw online today, someone said that with a couple days to go, it was the strongest March since 2007. So for all I know, this could be the strongest March ever. Regardless, it's very, very strong. Buyers are out, buyers are bidding and following through on their offers. This shows you the contracts per week, and you can see it's just continued to build. I don't know how sustainable this is for two reasons. The first is, we've been visiting this chart the last couple of months. You can see just mortgage rates keep ticking up. That's because the spreads have compressed and the 10-year treasury keeps going up. So maybe some of this demand was from people trying to swoop in before rates go up further, which isn't how it works, but that's how buyers often think. So that's the first problem. Maybe affordability is going to start to get a little stressed as mortgage rates tick up. We're still low by any absolute measure, but if people were looking to what their friend got 6 months ago or what they were quoted 3 months ago, it's going to be higher. They're going to be a little less eager to act. And then the other thing that is potentially going to slow down contract activity is we just don't have as much to sell as we did over the last couple months. So remember, normally we see inventory build in the spring, and we've just been stabilized, hanging out here in this 7,000 or so range. We're not seeing increases. We're seeing no indications that inventory is going to increase going forward. So with fewer listings on the market, fewer listings are available to get sold. So that's just another thing that might dampen contract activity going forward. But the market could still stay strong as buyers start to get a little more aggressive as there are fewer listings for them to choose from. And we are seeing that. We're seeing a lot of buyers ask, when are the listings going to come to the market? When are the listings going to come to the market? And we keep saying, well, normally it happens around this time of the year. Not this year, though. Here's a listing inventory by price point. It's actually interesting that we have a big increase on the low end, and we're actually down significantly on the higher end. So a little bit different than what we were seeing earlier in the year. And then the pricing, we have the charts here as always, but remember the pricing is always a very lagging indicator because buyers need to go out there, find the place, have the offer accepted, have it go into contract, have it close, and then Acris needs to record the price before it's reflected in any of this data. So you really you're looking backwards, call it 4 to 6 months when you're looking at this data. So what we're going to see is buyers getting more aggressive on the listings that are available on the market, and then getting a little more aggressive on the next one. When they miss out on one, that pushes prices up little by little. Usually you see inventory leading pricing. So I would expect pricing to possibly uptick a little bit going forward, even if it's not necessarily reflected in this data. So basically, very, very high demand. Inventory is still very restricted, and we're not seeing any indications that either of those are going to change significantly, maybe a little bit, or the degree to which contracts are up or listing inventory trends, but still high demand, low supply, bodes well for the market going forward. So as always, we're here to help, and also want to encourage you to subscribe, because we usually publish this on YouTube about a day or so before we actually send it out on the email list. So you can click the button below and get it as soon as it's ready. And we look forward to speaking with you next month. Thanks a lot. Bye.